Good morning. Thanks for joining us today. This is Anthony Parent of IRSMedic. Today is Friday, August 23rd, and we're going to have a little bit of a feisty episode for you today. Really, what has happened is that earlier this week, there was a hearing on proposed regulations for Forms 3520A and Forms 3520. Now, the issue is, and this is really what this podcast is focused on, not the foreign trust rules generally and foreign gifts rule, but what we're talking about is these forms as they relate to this particular issue, tax-advantaged foreign retirement plans. Because the regulations, or the statute is vague and the regulations are uncertain, there's massive confusion over whether or not a foreign retirement plan needs to be reported, depending on what country it is and what forms are reported and what's required. And what we're looking for and what we've been modestly requesting from the IRS is actual clarity on the subject. We get things that come out and they just muddy the waters when you look at them more and more. In particular, I look at Rev Prop 2017 as what that was offered as a solution as relief. But as you dig deeper, it doesn't seem to apply to too many things and people can mistakenly use it. So we've been looking for some intense clarity on this subject and actually some relief from it. Joining us today is the great John Richardson. And John participated in a hearing that was conducted in Washington, D.C. about this earlier in the week. John is going to be talking about his experience. We're going to go over some of the comments he made and what we think the temperature was of the room and what we think might happen, along with some other things that aren't looking so good there. It's not looking so good there. John has some choice comments for the various expat groups that are out there. And also joining us today is Keith Redmond, who will be talking about how this relates to the people he talks to every day. How it could help them. Yeah.
And if I may interject just real quick, one of the
Please,
things I'd like to hear you guys talk about at the end is what does an individual do, an American overseas who's dealing with a perceived foreign trust? Who do they go to get proper information? Because we had a gentleman the other day who went to a tax attorney and got such incorrect information that he was on the ledge, saying that he was owed a significant amount of money, which was not true. Yeah. So that would be a good help for people who are listening. Where do they go to get proper information?
Yeah, well, I think, I have a good idea. Contacting John and I, and even you, Keith. I think.
Of course.
We'll get into that a little bit later, right? So we'll get into that later. Your calls to action later. We'll talk about that later. But I want to welcome aboard the great John Richardson for his incredible work he's done on this. John, thank you so much for joining us today. And as I was reading through, and I didn't realize this, I was reading through some of the comments you made, actually, the comment, and I'm blown away by the sincerity, the in-depth, how good your comments are, irrefutable. And I think when I'm looking at this, John, because I think this is where your frustration is that you are not representing one of these large expatriate groups. You're not part of Democrats abroad. You're not part of Republicans overseas. You're just part of this small little nonprofit organization that's trying to bring some sanity to the world of U.S. citizenship-based taxation, basically by ending it, because that's the only sane thing to do. But yet you're sort of SEAT is your organization, Stop Extraterritorial American Taxation, seems to be a voice in the wilderness. But a strong voice. Is that would you say is what's going on here? Did you feel any of that while you were there or while you were participating?
I don't feel anything when participating in these types of things. Well, I mean, we'll get to that. I think that there's absolutely no question that SEAT has by far, I don't even think there's a close second, by far the best research advocacy and understanding of this topic. And I will repeat, there is not a close second. Okay. And the reason for that is that this is what SEAT is about. Okay. It was formed only to deal with this issue, understand this issue, provide advocacy on this issue, to represent, to the extent that it represents people, to represent individuals harmed by this in a completely nonpartisan way, and to do what we can. And by the way, since you got me going.
Are you guys talking?
Yes.
Since you got me going on this, okay.
I don't hear John.
The website is seatnow.org. And, there's always discussion about financing. I can tell you that we have never sought not even 1 cent, to support these activities, which have been enormous. If you look at what's up there, the articles that Laura has written, all the submissions that SEED has done. And, and I remember when SEED was formed, there was some discussion about following the usual sort of fundraising path. But, the thought was that, you start raising money from people and then you have to listen to them. And we didn't want to be in a position of having to listen to anybody. We didn't want to. I mean, this is just pure research, advocacy, and understanding at its very best.
I mean, expats are incredibly fortunate that everyone is incredibly fortunate of your efforts. Incredibly fortunate, and unsung heroes, really. And it's an honor. It really, John. And I was reading the comments today. I said, what an honor it is to have you as a guest. I mean, you are just one of the greatest guys around. You're sacrificing of your efforts.
Let's not.
I'll let our audience decide as we go through this today. Is John one of the greatest guys around? As we go through today, you guys you can chime in and let me know. All right, so I want to just so we're going to move over. I just want to talk about. So you took some notes during so we had a hearing that went on August 21st. We had that hearing. So I just want to go over some of the notes, and then I'm going to have some of your comments, and we're going to kind of analyze, sort of where the issues are and where the confusion may lie. All right, so let's get up your notes here. Here's the notes that you had from here. And by the way, I put the links to all these links. You're going to find, if you're on YouTube, you're going to find them in the description. And if you're on Twitter, I just posted a tweet with all of these links here, so you can follow these yourself. So here we go. Let me get this up here. Yeah, so here we go. Here are your comments. I can just make those even a little bigger. Why not? Right? So these are, and this right here. What link is this, John? That is to.
Well, that on May 8th, Treasury. I mean, they're following their legal requirements, right? So
yeah.
they're required to post this in their proposed reg in the Federal Register, and then they're required to provide a comment hearing, a period. Give a shout out to Democrats Abroad Tax on this. They did do a good job in generating comments, about 1,500 comments.
Whoa.
Same comments. Oh, yeah. Well, their comments were mostly for the purpose of reflecting the frustration of individual Americans abroad, that there was, a thought that their vanilla foreign pension or something might be considered to be a trust under these. But the point is that they were able to, get that out. And that's the benefit of having, 200,000 members or something like this. Anyway, so that's what that is. There was a comment period, I think, until early July. Part of the comment period, you could say, if you wanted to make a public presentation, there are two ways to make a public presentation. You could either do it live, do it by telephone. I was going to get on there live. I decided at the last minute not to, partly because it was limited to 10 minutes. And by the way, there were only 6 people, if you can imagine. And I mean, this is a hugely significant proposed reg for reasons that we'll get. There are only 6 people.
Wow.
Thank
you for being there, John. Right.
4 of them were people who I would say were sort of aligned with what I was trying to achieve. There was I can't remember his first name. Dennis, somebody up in Ottawa, Canada, was speaking just from the point of view of a taxpayer. Yeah. Here, you
go down here. Okay, so here,
going down. Okay, so here are the. So basically, sure, let's go through. Gary Carter is a Minnesota-based CPA who's done an awful lot of work in this area.
Yeah.
Very competent.
Good guy. Great guy. Gary Carter's a great guy. Yep.
This issue. He ended up testifying by phone as well. Mr. Alden and Ms. Brodsky did a very nice presentation. They represented the American Institute of CPAs, but they were there specifically on the 60-48 issue, right? None of this other stuff. Or they may have talked about the foreign gifts, but I mean, they were squarely in the corner of individuals who are unjustly affected by this. Mr. Matz of the American College of Trust and Estates, as I think you might expect, was a little more cerebral and a little, I would say, broader in his approach. But continuing on down, the other three, Mr. Dennis Haskell, who I actually, I spoke with him in early July, and very grateful for his taking the time to explain, to use Keith's language on the ground, what this stuff meant for people, these rules, and then I think two of the usual suspects continue. Yeah, okay.
There
So
you go. Heard this, Rebecca.
yes, and John Richardson. So what happened was that Gary Carter, who was originally supposed to be there in person, at the last minute changed to telephone, and so he actually was last. I wish I'd gone after him actually, because I went fifth out of the six people, and that was very, very good because I was able to reference things that other people had said. Right? I mean, I gave you my notes, but I don't know to what extent it followed that because I was able to talk about things other people said. But part of the problem with this, Anthony, is that not only are these 10-minute presentations, but there's a timer and you literally get muted at the end of the 10 minutes. So it's very difficult to, I think, do something that's really meaningful. There's an audio of the whole hearing. I put it up. I think I may have sent it to you. Anyway, you can find it. Anyway, that's the background of the thing. And what I find most interesting is that the whole rig, right, which is here, deals with a lot of different things. But, 6 out of the 6 people there focused on the 60-48 problem, which we'll get to. And 5 out of the 6 focused exclusively on the 60-48 and the foreign gift. So, I mean, this was definitely what this hearing was about, no question.
Wow. So I mean, and I think this is really the nature of the hearing is that we're talking about the foreign gift issue, but also this idea that something is inherently a foreign trust. That if you have something that someone else is holding the money to for your benefit, that's a foreign trust. It just sort of defaults, and it's sort of an absurd idea that a foreign trust can be created without a trust document. This idea, and that's really, and that's really the issue. That the primary issue is like, it's just a tax advantage. It's just a plan. It's just a contract. Why does every contract, create a trust if it's not a corporation? Is that what we're saying here? And it's sort of an absurd position, from my viewpoint, to claim that a foreign retirement plan is automatically and a foreign trust when it doesn't operate as a trust. It's not called a trust. It has elements of trust, but so does every contract. Every contract has elements of a trust. Yeah.
Anthony, I mean, it's interesting that you describe it in that way because, first of all, I think we need to be clear on what the proposed reg is about and what the hearing was actually about. So the hearing was about regulations to support Section 6048 of the Internal Revenue Code, which is essentially reporting requirement on steroids, okay, for anything that has to do with a foreign trust. Now that people won't know what 6048 is, but they surely will know what a Form 3520 is. And I don't want to get into this today, at least, but if you look at a Form 3520, there's 4 parts. The first 3 parts of it actually are a direct expression of Section 6048, the reporting of foreign trusts. And the 4th part is a direct expression of the foreign gift reporting rules. So what the hearing was really about, what the reg was about, was not whether something is a trust. Okay, that wasn't the issue in the reg. The issue was the appropriateness of requiring people to file an information return where they can lose 35% of the value of their pension in the form of a penalty in relation to this type of product. Now, while I'm on that note, I want to tell you basically what my position was in the 10 minutes that I had.
Great.
Okay. And it was this. My view was this, that it doesn't matter a damn whether these are trusts or not. And I think that this conversation should be avoided, whether it's a trust, because that takes us down the rabbit hole and distracts. My position was the Treasury should have a blanket exemption from 3520 reporting, making it clear, without regard to whether this is a foreign trust, for the purposes of clarity for everybody and certainty, foreign pension plans and foreign tax favored accounts for people who live in the countries, okay, where they have these things should be completely exempt from 3520 reporting. And I made this point because, I mean, it's interesting to me that you, I mean, quite properly in terms of understanding the issue, you yourself began with the issue of whether something is a trust or not.
No, you're right. Exactly. No, and John,
That is almost, except in the most clear cases, a matter of opinion. Okay. And that sure, doesn't provide people with certainty. I mean, one of the things I said in this was, and I tried to put this in simple terms that anybody can understand, it was this, that for resident Americans, pensions, IRAs, etc., are a form of security. But for Americans abroad, their pensions, IRAs, equivalents are a form of anxiety because of the penalty thing, right? Got it? And they
John,
this was the angle I was trying to take, and they even avoid these things to avoid the risk of penalty. And then I tried to say, I don't know how well this came out in the 10 minutes because I was under, a lot of time pressure, but I tried to say, and this is no disrespect to you or to anybody who I know personally, right? But what I tried to say was the Treasury at this moment has a moral obligation to protect individual taxpayers from the segment of the tax preparation and compliance community that doesn't understand this stuff, and because of their own lack of understanding, brings people into this 3520 regime. And it's only the people who file the damn things who are eligible for penalties anyway.
right.
So, I mean, going back to the 2017 thing, and again, let me give another shout out to Gary Carter here, who's taken a courageous and principled position on this. The problem was that people were getting, all these penalties, for these really, really benign things. So that was my main point, right? In other words, there was all this going on back and forth in the hearing about, is this a trust? Is that, I think that that's the wrong way to address this issue. Okay. Because the other point I made, and I think this is critical to getting this resolved, is that we are not talking about whether a foreign pension or Kiwi Saver in New Zealand, or a TFSA in Canada, or an ISA in the UK. We are not talking about whether those things are required to be reported to the IRS at all. Why? Because we know they're reportable on a Form 8938 already.
Right.
We know that in many cases, these things are reportable on an FBAR. All we're talking about is whether it's appropriate to require yet another version of
the third, right.
Incomprehensible form.
Right.
If you make a mistake, it's a 30, it can be like a 35% penalty. That's what we're talking about. Okay. And I think that that's the real issue here. And for the record, no, I don't think these things are trusts. Okay. But again, I don't think it's a good idea to get into that debate.
I think, John, I want to thank you for that, because I think I agree with you now 100%, because you're getting into that debate, whether it's a foreign trust or not. The IRS isn't willing to give up things, it doesn't want to give up anything. It's very, very loath to give up anything, but it's like, okay, well, look, we don't need to get into whether it's a foreign trust. You can still claim it's a foreign trust or whatever you want to do, but you can also create regulations that make sense. And that's really what we're talking. We can make regulations that make sense. Why does the IRS need this information yet again? yet again on a third reporting form that, and as we were talking about earlier, the RevProc 2017 is so complicated. It goes on that I don't see how most tax preparers could possibly understand it, how they could possibly help, how they could possibly lead to the right conclusion about when that is actually appropriate. And I would just say this, looking at that regulation, okay, I can tell you things that don't apply. An Australian superannuation, it does not apply to RevProc 2020. It allows, an Australian superannuation allows for additional contributions. Any foreign retirement plan that allows for additional contribution cannot use this relief in RevProc 2017. So you took out like the biggest ones, right? The RevProc that's offering relief just negated the biggest ones that I come across.
Yeah.
Well, this doesn't even help.
Right.
This helps no one. None of my clients.
Yeah, Anthony, let me, let me add to that, because I mean, obviously, I've had to think about this in the last week. Okay, I mean, I think first of all, I think you're absolutely right. This is also a point that I tried to make. Okay, what I'm about to say. The reason, I think what I actually said was that these things don't work. Okay, and they can't work. That meaning things like RevProc 2017 and what they've got now. But the reason, although you're 100% right, is true for an additional reason, and it's this. But first of all, I mean, I think everybody would agree that understanding something like RevProc 2017 is a big job. Okay, it's not easy to read. Okay, but to understand it, it doesn't exist in a vacuum. You see, you can't apply something like RevProc 2017 without completely understanding the legal characteristics of something like a Canadian TFSA or a UK ISA. And 99% of the people who use those things don't even know what the characteristics are, right? So, I mean, is it reasonable
Right.
to expect some general purpose U.S. expat tax preparer, make up any group you want, U.S. expat tax preparers abroad, I just made up a name, with a client base all around the world? How can somebody like that even begin to properly apply that unless they have an intimate and detailed knowledge of the product in the other country? I mean, it is absolutely absurd. And then you have the fact that there's a real compliance cost problem here with this. I mean, let's assume, there's I think the low end cost for U.S. tax returns at the bottom would be what, around $500 maybe, low end, something like, I think, right? But here's the thing: whether it's five, whether it's 1,000, whether it's three, okay, the tax preparer is not being paid enough to invest a few hours to figure this out, okay, and they're not going to figure it out because they can't even be certain they have figured it out, even if they were invested the time. So all they're going to do is, there's this mentality in the tax preparation industry, which I frankly think is dangerous, which is when in doubt, file. Okay.
Oh,
And I think it should be the opposite. When in doubt, don't file. All right. But anyway, I mean, that's another aspect to this that I think is critically important. Now, yeah. So I guess I think the message here to some extent is how dangerous it is to approach this from the aspect of, are these things foreign trusts or not? Okay, I think that that's the wrong way to do it. I think it's incredibly dangerous. The right way to do it is, given that there's pre-existing reporting requirements. And actually, let me back up. These rules go back to 1996. And I think there's 2 points that need to be made. The first is that these rules did not even contemplate the existence of Americans abroad. They were solely for the purpose of going after resident Americans who were trying to offshore money into like a trust in the Bahamas or something. But secondly, there was no Form 8938. Okay, so I mean, and there was no FBAR enforcement. So I think arguably at that time, right, so the 3520
oh, right.
96, arguably at
Yeah.
the time, there wasn't another way to have these things reported, that wasn't so intrusive and problematic. But since 2010, we've got Form 8938. And if you look at the damn form 8938, what's incredible about it is that it says list the things you're reporting on a 3520, 5471.
Yeah, right.
Report them here. So why not just utilize that and give people an option of either reporting them on a 3520 if they're stupid enough to do so, or just note them on Form 8938, which they're required to do anyway, right? And that's how this thing, really should be played out. And there should be no discussion, in my view, of whether these things qualify as trusts, because this hearing is about a reporting requirement. It's not about whether it's a trust. It's about a reporting requirement. And is it appropriate to have a reporting requirement where, Treasury can sit there ready to confiscate 35% of the value of somebody's pension who reported on a 3520, right?
Yeah, and I'm thinking also, there's just so many wonderful arguments you had in there. I'm thinking, one of the issues that comes across all the time too is that, the surest way to get assessed these penalties is to file the form, and the person who doesn't file the form doesn't get penalized. Now, and this is what I could, it does happen where, we'll have a client, we do the delinquent information return, we'll do that. And there it comes, an automatic $10,000 penalty per each one filed. So I'm working on a case right now where a client can assess two $10,000 penalties for the 3520 that we filed, the one that we filed, right?
Yeah.
So this is not uncommon. It happens a lot, happened a lot more. So I filed, so it's typically to help me get these done a little quicker. I usually file a Form 911 with a taxpayer advocate. They're a little bit, can move the case along a little bit quicker. So I talked to the taxpayer advocate, a very wonderful woman out in Portland, somewhere out there. She understood the issue immediately. Oh, yeah, Ogden did this, huh? I'm like, yeah. Oh, wow, they're really aggressive. So, I mean, this is the thing. They even know how awful the IRS and Ogden is the automatic assessing industry in Utah. So that's even the taxpayer, and this is a significant drain on the taxpayer advocate as well. That you're creating all these nasty penalties. Now, one is like, okay, some people get scared into paying them, and they're taxed. Oh, you better pay that or else. They shouldn't have to pay it. They did what they were supposed to do. And it's the IRS's uncertainty. Them being wrong. And then other people will fight to get it done. And without the taxpayer advocate, the reason why is because I tried it before years ago, and generally it would take 2 to 3 years to resolve these things. And, I'm having clients looking at me a little sideways, like, what's going on here? I'm like, no, don't worry about it. It'll be fine. Just take a little time. But the taxpayer advocate, it goes a lot quicker. And they're incredibly familiar with this issue. And it's not, this is a sort of the thing as you think about it, how the IRS is requiring this and this lack of certainty. It's showing a disrespect to, not just taxpayers, but the entire IRS, because you're creating an intense workload on an agency that doesn't have the staff to do this. So it's really, so it's to help the IRS as well. Hey, let's get rid of this because number one, you got it on 8938 already, right? You already have the information. Why do you need it again on this form when we're not sure if it needs to be filed? And here's the problem for some of those, wondering, why don't you just file the form? John, why don't we just file the form? Why don't we just file the 3520A and 3520? Why don't we just, why don't we just solve the problem? What are we belly aching about? What's the problem with just filing the 3520A and 3520?
Well, Anthony, look, as you point out, I know people won't believe this, but unless it's clearly, within the deadline for filing, you're going to get an automatic penalty. And it is true that, these things can be abated, but it's time consuming. It's expensive.
Yes, it is. Yep.
You're dealing with a system that, I got this thing last night in my email from somebody what it said. I'm going to couch this. This is what it said. I haven't had a chance to independently verify this, but the IRS Treasury has assessed over $7 billion in penalties for people who haven't reported a foreign gift, or rather reported it late. Okay, because that's the only way they know about it. I mean, this is the problem here, Anthony and Keith, and anybody who's listening. And I think that this is unfortunately a statement of fact and not an opinion, is that you're dealing with a system that is so unjust, so immoral, so vicious when it comes to anything that is, outside the United States, that for many people, compliance has become a business decision. Well, if I file this, I guess I'm on side with the law, but on the other hand, I know I'm going to get a penalty. So what do I do? Sort of thing. I mean, it's completely out of control. And to the credit, talking about a taxpayer advocate, I mean, to their credit, I mean, they make this point, in their annual report, I mean, every year. And, I don't know what, of course, I do know what the answer to all of this is, right? And it's the one thing that you can't get anybody to advocate for or agree to. And Keith, do you know what that is?
What's that, John?
Do you know what the one thing is that could solve this whole problem?
I do.
What might that be, Keith?
Severing U.S. citizenship from tax residency.
No kidding.
Are you sure, guys? Because we got a comment from Melvin here. Are you sure? Because I think Melvin, there might be another way, really. Melvin just got a call from Democrats abroad to vote.
Well,
so then he told,
wonderful, isn't it?
Yeah, and he said, okay. He said he will not vote because of the hurtful policies affecting Americans abroad. Tax is not the problem. The penalty regime is, and Melvin's correct about that.
And I have to add my 2 cents is that ask Melvin when he was being asked to vote by Democrats abroad. Did they even mention anything about the issues adversely affecting Americans overseas?
Well, that's the thing. He actually
just asking to vote no matter what.
He actually had that as his follow-up comment, believe it or not. Yeah, they actually weren't interested, Keith. They just wanted his vote with no commitment to do anything beneficial, or at the very least stop the policies hurting us.
Exactly. Hence why Americans overseas allow themselves to be abused and used.
Abused and used by exactly. They're punished by the people who they're voting for. And
I think they need to understand. Okay.
And they were, not interested, right? They only wanted that vote. Yeah.
Well, this is not new. I mean, I've been involved in this for many, many years through a lot of elections. Okay.
Yeah.
And, there is absolutely no question that Democrats abroad is an organization designed to just get votes from abroad. They do not, actually, I'm going to say they do not, as an organization, they do not care about the tax issues. Now, we have the Democrats abroad tax committee that presumably, and I think does care about the tax issue, right? But the organization's very, very beneficial to Democrats abroad generally because it can create the illusion of having a concern about this problem when they don't have any concern about it all, at all. And this is why, in my opinion, and by the way, let me just say that I respect, like, and support every individual in the world or group, who's working on this problem in different ways. Okay. I do. But this is why I don't think that Democrats abroad will ever get to the public position, that what has to happen is that citizenship has to be severed from tax residency. They will not say that. Nobody will say that. That's so fascinating. It's as though Americans are so far gone that they wouldn't recognize themselves without the umbilical cord being tied to the U.S. in terms of taxation.
And none of the other, the majority of the other Americans organizations fall in the same category.
Oh, absolutely.
They will not state that supporting severing U.S. citizenship.
Yeah, they do not. They do not. These organizations do not support ending citizenship taxation. Now, I'm going to say it again, and I'm going to explain it. They do not support ending citizenship taxation. What they support is the continuation of citizenship taxation with some sort of relief around the edges, usually,
that never can work, and it can never work. And that's what we have. I mean, then we kind of have that, but it just never can work. And so I wanted to get up because this is really the thing. And I just put the link in the super chat. And again, it's also in the description. And I also just tweeted it if you're watching this on X. This is the public submission that John made, and it's incredible. We can't go over it, but I just want to show everybody who's watching just how absolutely incredible and in depth this is, and how serious John has taken it. And really, with thanks to Karen and Laura, their work on this as well. This is a submission. If you look at this is incredible. John, I don't know how much time you spent on this. I mean, basically, one day. Well, you've been living it. So, right. I guess you've been living it, right? So,
well, I understand the issue. Okay. I will give myself that. I understand the issue. Okay.
And yeah, here's the executive summary right here. And I just explaining it so well about what it is. And I really, really enjoy your approach on this. And I think, right. I think, again, I think, my way of challenging it, it's not a foreign trust. Yeah, that might not be as well as, sort of working like, no, let's just not get into that. What's the point of filing? What's the point of this filing requirement? It's a drain on the IRS. It's a drain on taxpayers. And it creates a whole bunch of uncertainty and anxiety. And again, I think you're flipping it on the head to say, hey, look, a retirement plan is supposed to
they're to provide security, not destroy people through anxiety, right? And this is
right. Right. And I guess this is where, and I think that, look, we're talking about regulations. So this is a regulation, and they have to form this new regulation. And the thing that interests me is, the Loper-Bright decision to say, hey, look, regulations sort of need to reflect the law. But I don't know if there was anything in there that said as well that, well, the regulation can't be stupid. It can't be incredibly stupid. Maybe there is something about that because, would the agency's interpretation be reasonable in this case? And I guess, well, what's the part that we are trying to get to? Well, is the agency's determination that it's a foreign trust unreasonable? Well, maybe not. But is the agency's determination that a form should be required that could subject to people to ruinous penalties for not filing a form and not really being in tax non-compliance? And I think maybe that's the part. What I would say is that what I'm looking at this is that you laid the foundation for a future challenge for whatever regulation comes out, because you clearly made the case so clear that this is ridiculous, that this doesn't benefit anybody. This isn't helping. You're already getting. What's the point of tripling the reporting requirement? What benefit does it serve? Just so that Ogden can come and randomly assess penalties whenever they want? Well, that's not really a legitimate concern, because when they're doing that, again, they're just creating additional work.
I don't know, Anthony. I mean, I am. The part of the problem with this is it's very difficult to see any purpose other than penalty assessment, right?
That's kind of where we're at. And then this is where, Melvin just has a great question here. Maybe, could the Treasury just provide relief on its own?
Absolutely. You'll find in section 6048, I think it's D, that it's right there. I mean, it's plain black and white. Not only that, but they could provide relief for citizenship taxation by changing the regulation under Section 1 of the Internal Revenue Code to define individual as a resident. Absolutely.
Yeah, absolutely.
Look, so mistake about it, Melvin. Okay. This notion that, Treasury can't do anything is just pure unadulterated bullshit. Okay, they not only they have the statutory authorization to do so. And I hate to say it, but after having, listened to that and, had my 10 minutes, whatever, I don't think that I doubt that any of it will be taken seriously. I think that they're going to just lay this thing out with the ongoing confusion. They love confusion. Right. I mean, this is part of the problem, is that clarity and certainty is the enemy of Treasury.
Well, I guess this is my point. So John, and so was anyone who was testifying for these proposed regulations saying, you know what, we're here to support confusion. So please, So was there a constituency saying, hey, this is great the way it is, we should do more? But so it sounds like everybody who was giving a comment was saying, hey, look, something needs to be done about it. This is insane.
Well, okay. I mean, yeah. And there were some very well-versed commenters there. I mean, in fact, I think they all were very well-versed, right? But, you know, as you know, I pride myself in my simple-mindedness. Okay. I mean, I tried to, steer this back to what are we doing anyway? Just exempt the damn things, I mean, rather than getting into whether, this particular section, I don't even remember what these regs say. It's so much work to, plod through them and understand what they say. But what is clear is they're completely unnecessary, a waste of everybody's time. And they need to go. But I think people have got to renounce U.S. citizenship. I mean, I told them this in the hearing. I said I know people who've renounced over 3520, and I do.
Yeah.
I mean, they just don't want to live. And by the way, I used some of the lines from our podcast, Anthony. I got in the sort of penalties instead of the sort of Damocles. I also got in. These are certain penalties.
I saw that. Yes.
So there you go. I mean, we brought some things from IRSMedic podcast right there into Treasury.
Right there, right to Treasury. Here it is. Well, now this is sort of what I'm thinking. So let's say, okay, so Treasury comes back with a regulation and it doesn't offer, any help, right? And now it's like, well, geez, you got all this testimony to say, don't do this, don't change it, make it simple. You got all this testimony. And there you are, Treasury, ignoring all comments. You essentially ignored all comments. There wasn't one comment you didn't pay attention to. And so you're getting like, okay, well, you had a public comment period. Well, what's the purpose of the public comments then? If you're not going to listen to them, then what's the purpose of the public comment? And then you're like, well, this is just a public comment by name. You don't want to know the public comments, and you certainly don't want it to impact the formation of your regulations. And so what does that mean? Well, what that means is that, well, it is the agency determining solely, without any impact from anybody, what the regulation is. And that would seem to be a little bit of a violation of our new, Loper-Bright. We're not going to, the Supreme Court is not giving the Treasury the deference, the blank, the rubber stamp they essentially had with the Chevron standard. It was a rubber stamp every which way. They don't have that anymore. I don't know if they're even taking Loper-Bright seriously. Myself, I don't even know if they. We'll wait for it to kind of go away. We'll get a new Supreme Court justice. We'll flip that around. So I don't even know if they're going to be taking it serious. Go ahead, John.
The part of the problem, you start talking about Loper-Bright. I mean, here's what that triggers in my mind, right? So we look at this stuff. These are Clinton things. Clinton Treasury in '96, which was the source of so many of the problems Americans abroad today. But yeah, by God, go vote for the Democrats, everybody. Okay? Yeah. But what I find, I wonder if this would be a possible way to attack this stuff, right? I mean, it's very, very clear that this law was never intended to apply to Americans abroad. Okay, very, very clear.
Yeah, right.
So shouldn't Treasury responsibly interpret the regulations, okay, in that way? And specifically, right, on the point that I'm making, that, the reporting as a general principle is one thing, but requiring duplicative reporting on a form that you can't understand that costs $500-800 or more, to file, and subjects you to a 35% penalty is entirely a different matter.
Yeah, and as you're discussing this, John, I'm realizing how so much of this penalty bonanza was created, and you have to understand how the first offshore volunteer disclosure programs worked. Essentially, the 2009 and 2011 were basically take it or leave it propositions for people. And it was very difficult and very uncertain to opt out. Now, we did opt out a few people, and we were able to save them a ton of money, but not everybody has that risk profile. And trust us, it was risky for us too, but we worked out and it was successful. But, the problem was that, so what the IRS did, this is what they did. It's like, hey, look, anytime you see these forms, we're just going to be penalizing, and it's take it or leave it. You really can't challenge it. And so it sort of created this whole idea, the IRS just like, yeah, we're just going to penalize this. Well, who's overseeing this? Who is the level of review? There is no level of review. There is none. It's take it or leave it. Do you want to go to jail? Okay. Yeah, then just do what we say to do. And so that was sort of one of the nasty things. And so just kind of that was, I think, one of the big things that got this whole penalty wagon rolling. But you have to understand that was the IRS unchallenged and coming up with a lot of these things. And a lot of these things they seem to have retreated from because they might be missing the entire legal basis to do so. So that's one of the things that we've been seeing happen. Here is a great, I think a great explanation of the context, exactly. So many people, you guys know this, you know this, you live it. Here is, your beautiful, beautiful comments on this, the scope of this, going through this. And here it is, a clear intent. And as we said, right, this is what we're talking about. The regulations have to bear something resemblance to the law. The law had nothing to do with foreign retirement plans of Americans overseas. It was focused strictly on homeland Americans who were using foreign trusts to skirt their tax liabilities, right? So that's what it's for. And now Treasury comes out and they've come out with these regulations that are incredibly divorced from the actual law, from the intent of the law. And so they have a problem there too. And so that's another challenge if this does come down. If it does come down, if they don't really make it and they still insist on penalty, penalty, here it is right here, beautifully stated. I couldn't state it any better than this, John. The foreign trust rules were designed to combat resident Americans creating trusts in foreign jurisdictions, transferring U.S. assets into foreign trusts, and thereby removing capital income from the U.S. tax base. Sounds exactly like a tax advantage foreign trust, right? Or a tax advantage foreign retirement plan, right? There is no indication anywhere that non-U.S. pension plans or tax-favored retirement plans in foreign countries available only to those tax residents of those countries, right? Great point. Were the focus of IRC 6048. There is no indication that the foreign trust rules were designed to or intended to apply to non-U.S. pension plans. Perfectly said. Perfectly said. Thank you, John, for that. And then that's really why are we doing this? There's no relationship between the law and and here it is. There's no relationship between the law and the regulation, John. And this is the part that misses me. It's like, okay, so hey, look, this would be a bad requirement. Right, this is a bad requirement. It's not really found in law, and so it would just be something. If this is my point, if the penalty was say $200 for not filing, that would be wrong, right? Well, you're automatically assessing people a small amount because you don't have the justification to do this. They're automatically assessing people $10,000 as if it's nothing. An automatic assessment as if it's nothing. That's what they're doing. So it's so beyond. It's like, well, you have no authority to assess these ruinous penalties. Having a ruinous penalty allowed by law is terrible, right? Having a ruinous penalty not authorized by law is, well, that's welcome to the United States of America. Welcome to the U.S. tax code.
Yeah. I got to go in a second because I got a meeting in 7 minutes. However, listening to you caused me to have the following thought here about the confusion. And this is really going back to the issue of trust or not. Now, I'm not 100% sure of what I'm about to say, but I think I'm right. So a lot of the problem here, the backdrop to this, although I think you can ignore it to solve the problem, really is, is something a trust or not a trust? I mean, there's no doubt that that's part of the problem. Once you get, outside of the stuff, it clearly is. And what I think happened is that, in 1996, part of all of this, right, were new Treasury regs, entity classification rules, defining what's a corporation, defining what's a trust. And I don't think the left hand knew what the right hand was doing on this, right? So what they did was they came out with these rules in 96 for what's a trust. Now, bear in mind, these rules appear after, assuming, I don't know for sure, but for example, Section 402B uses the word trust, I think, or something like that. And I think what happened was that they came out with these regulations without any regard to where the word trust was used in the Internal Revenue Code, right? So what we have is under the regulations that came out in 96, there's no way that I think a foreign pension plan or certainly a tax favored account could be a trust. But you go to 402B, for example, and I think he uses the word trust. And if that pre-existed the 96 things, then somehow I think they're dragging, this pre-existing law into this sort of notion that this thing is a trust. But anyway, who knows? That's way above what we need to talk about here today. And I've got to go.
I agree. I actually agree with you on that 100%, John. Yeah, I think you're right about that. So I'm with you.
So what we have, and you talk about the Loper-Bright thing. I mean, if I were trying to make that kind of argument, I think the way I might frame it is something like this. Okay, can Treasury, is it arbitrary and punitive and unreasonable for Treasury to make regulations applying to Americans abroad in the context of a statute that was never intended to apply to them? I mean, I think that that's probably, how you begin to frame that kind of argument, right?
Yeah, I think there it is. Yeah, I think that's right. That would be the way to do it.
But on that note,
I know you got to go, John. So if you are an expat and this is you had enough of this, you can reach out to John if you're thinking about renouncing your citizenship.
Yeah, I think that people who can get out should get out.
You got to get right on.
Right.
And we'll let you and Keith, John, if you need to take off, go. Keith and I can finish up.
I will do that. Thank you.
Great. Thank you so much. All right, Keith. So what do you think? What do you think of this here? Huh?
Oh boy, what do I think? What do I think is, like I said at the beginning of the call, is that, man, oh man, if you're dealing with a foreign trust, you really need to have proper guidance.
Yeah, right.
And go to somebody who has the knowledge. And obviously you have the knowledge. I mean, I had to refer somebody to you who was getting incorrect information that would have been financially devastating for the individual.
Yeah,
so
yeah.
a good thing we spoke. Good thing that
and I was so
reached out
happy.
to me.
Yeah, and I'm so happy that he did speak to him, because it's unfortunate, because after you do certain things, it can't be undone. So caught him at the right spot.
Exactly.
He had, and this is what I would say is that if you do have something going on with this, if you have a tax professional now, you're trying to consider what to do. A great person to reach out to is Keith. Because one of the things is he'll kind of ground you. He'll stop the panic. Keith is has, I mean, I don't know if there's anyone in the world who really has the finger on the pulse like you do on this issue, Keith. Keith can calm you down, to let you know what other people are doing. He's not a U.S. tax professional, but he can speak to you about your personal issues and really the way forward. And
take a look at all your options. I ask very pointed questions, and also now, not only taking a look at all your options, but those options include the possibility of getting a second opinion.
That's right. Yeah, and
another tax compliance professional.
And I love giving second opinions, because so many times I'm able to pull people out of the fire that they're about to go into. I really don't look at it as a good idea to commit financial suicide to avoid financial ruin.
Right.
People will intentionally commit financial suicide to avoid potential financial ruin. And so you really want someone on your side who, looks you. And I just say this, that, a lot of the cases we take over, tax industry does a lot of scaremongering. And gets people doing crazy things that the IRS doesn't even want you to do, that the IRS doesn't even want to do. So if you are getting something that just seems insane, you can reach out to Keith. You could email him at US overseas _advocate at outlook.com. Also, if you do want to discuss your issue with us confidentially, you could reach me, talk to us at IRSMedic.com/offshore. Our team can take care of you and make sure that you get the advocacy you are entitled to under the law. Also, I want to just give a shout out to Keith for his work with his Americans. What's your Facebook group again, Keith? I say it wrong all the time.
That's all right. American Expatriates for Residency-Based Taxation.
Rolls off the tongue, doesn't it?
Right.
So yeah, join us. You could join us there on Facebook for that great community of people just coming together. And I see people coming in panicked and then just getting some advice and getting calmed down. So if that's you, maybe take a look at that to see what other people are doing. So understand you're not so alone. And I think that's one of the problems that you have, is that you feel, like, oh my God, I'm out of compliance here. Oh my God, let me fly. I better do something about this. And now you're in a very vulnerable situation where a tax professional could tell you anything and have you do something financially ruinous and claim that you're, something that's just not true. And I've seen it just again and again. We've taken over so many cases. So that's something else to get onto. So with that, I do. There's one awesome more comment here, in this that I just want to get shout out. Oh, by the way, I want to shout out to John. Coming home with John Allen. Hey guys, hey John, thank you so much for joining us today. We're going to be on John Allen's podcast.
And he'll be on ours.
And he's going to be on. So John is going to be on. John is a U.S. expat in Norway, living the life there. Really, really positive dude. Really appreciate it. We were on his podcast last year. We're going to do a little recap. Really happy there. And what day is that coming up? We're going to be on. Is that? Got that on my calendar.
Let's see. Yeah, I have it on my calendar as well. So we are doing the podcast with him
on Wednesday.
The 4th.
The 4th, yes.
And then he'll be joining us on Wednesday, the 11th.
Hey, pretty good. So so John, we're excited about that, catching up with him. And then one more final comment from here. Well, actually, we got a few more. We're getting more comments rolling in. Great, our great viewers. Melvin, isn't this the typical way the IRS operates? Define and redefine certain words like trust until the original meaning of the legislation is totally distorted and the IRS has the highest leverage. Oh man, Melvin. Oh, that's a spicy comment. I love that. That is agreed. Thank you so much. Borchell, thank you for this. This is right. A second opinion is very important. As long as the true second opinion is not the same as one package in a different terminology. Unfortunately, that happens a lot, but I would say this. I think we give an actual second opinion, don't we? That is an actual
right. But but getting a second opinion, if it confirms the first opinion, at least you're on the right path. But if it's completely different, then that's a good thing. It's like going to the doctor. You need to get a second opinion sometimes.
You got to get it, and sometimes a third. I had someone. They said they talked to 10 people before I was their 11th opinion. I was their 11th opinion. And then they said, wow, and then I get this. You know what? You're the first person to make actual sense. Because, I'm just, and really, because when you are scaremongering people, you got to leave out certain facts, right? And it gives you you kind of, when you're doing the scaremongering thing, it sort of boxes you in. So you can't think about things, rationally. So even if you need an 11th opinion, you could reach out, no problem. I really, again, it just gives, it gives our firm, this is really the firm, I just merged firms with the Bowen Partners, and we really, it's so exciting to be around attorneys like-minded who really want to be on our client's side. And it's just wonderful to be a part of. And we're picking up new partners too, people are just burned out of the typical, law. I guess I'm doing a plug too for Thaveau and Partners. If you are a lawyer yourself, a solo practitioner, sort of solo small firm, tired of being on your own, looking to join a larger firm, that's also something you want to reach out to me. I'll send you even my email on that. I still have a parent at IRSMedic.com. If you are an attorney yourself, tired of the standard, hey, how do we jack our clients for a whole bunch of money and whatever, do not sleep at night. If you're tired of that, we run a pretty ethical firm. Little bit of more of a, we're a Swiss firm, so I think we have a little bit of a European attitude to us, and so we're not about working ourselves to death or our staff to death, but really being there for our clients and advocating for them incredibly hard. So if that's something you wanted to reach out to me there. Final words, Keith.
I kind of gave the final words.
Right.
Explore all your options.
Explore all your options.
Second opinion. Get a third opinion sometimes. Don't let fear be your guide. You have to breathe and think rationally and think critically. You really do.
Beautifully said. Thank you, Keith, for that. This is Anthony Parent of IRSMedic. I want to thank everyone for watching. If you're on Twitter, be sure to follow me so you know when we're going live. Also subscribe on YouTube. Turn on those notifications because we do go live. We're actual real attorneys. We're real helping people. So our schedules are a little bit all over the place. We try to get together where we can. So that means it's hard for us to set a set time each week. So that's why it's great if you could subscribe, turn on those notifications, then you won't miss. We have really the greatest commenters. Thank you, Melvin. Really thank you. So you want to join and we really want to help people out. Again, this is Anthony Parent, IRSMedic. Thanks for watching.